Is now starting. All attendees are in listen-only mode.
Good morning, everyone. Welcome to the March edition of the Yankee Model Investment Club. My name is Brent Gall. I'm the president. I'll walk through a couple of introductory slides for those of you that may have not joined us before, just to give a flavor of the structure of the club, what we do in our meetings, and how to follow up for more information. If you've seen this before, you can feel free to take a small coffee break and join us in a few minutes. It's all the same information that I present each month. Our Model Investment Club is a better investing model club, which means we're a fully functional investment club with real money, but we are open to observation by the public. The hope is that you join us maybe with questions as far as how an investment club works, to get those questions answered and either apply to join our club if you're interested, or decide to form a club with your friends and family members. It's a great way to learn about investing and kind of spread the work of researching new companies to invest in. We were formed back in 2008. We currently have 6 members spread across 4 different states. We went solely online back in 2011, and we meet the second Saturday of each month at 11 a.m. Eastern. Our club, we're currently looking for new members. We don't require any investment experience. Any new candidates are mentored by an existing member to walk through our stock research procedure and how to present the information. And there's really no limitation on where you live, except where the state tax laws requires the club to file a return. All partners of our club must be members of Better Investing. You're expected to actively participate in the club's activities. This isn't a passive investment vehicle. And you're expected to make stock presentations on a rotating basis using the stock selection guide, or SSG as we call it, in rotation with other members. And for operations, we follow our Better Investing principles. We show respect to fellow club members. We have to remember we're all still learning, whether you just joined us a month ago or have been with us for 10 years. We're all still in the learning phase. We perform an annual audit of finances, which actually we just wrapped up last month. We file our tax returns and we follow our partnership agreement. So if there's any questions that we don't answer or that maybe come up during the presentation, or if you're interested in joining, feel free to reach out to our secretary, Sriram, at the email shown on the screen. I'll put his contact information back up at the end of the meeting if anything comes up while we're talking. For the structure of today's meeting, we follow a standard agenda. Today's agenda is available in the handout section of the GoToWebinar control panel on the side of your screen. All visitors will be muted during the meeting, but you can type in questions using the control panel as well. And our moderator, Joe, will, throughout the meeting, do his best to answer those questions, and he'll certainly speak up to make those questions more public if they're a topic that's applicable to the wider audience. We can also open it up to Q&As at the end of the meeting if there are any lingering questions that need to be discussed. Now, regarding registration for this meeting, hopefully you've been registered and you get the automatic reminders each month for the login information. If you were afforded this meeting invite from a friend, we encourage you to register yourself by going to betterinvesting.org and searching for our online event. This will just make sure that you always have the latest date information, and you get those reminder login emails just so you don't miss a meeting. And again, I'll put this link back up on the screen at the end of the meeting. And finally, just our standard boilerplate disclaimer that we're going to be talking about investment opportunities and securities in this meeting. That in no way should it imply that we are suggesting or recommending those securities to be purchased. We are not financial advisors or financial planners. Do your own research before investing your money and make your own decisions. And with that, we'll jump into our standard agenda. Next up is our educational segment. Sriram will be presenting PERT. I'll make you presenter.
You need to unmute yourself, Sriram.
Yes. Yes, I unmuted myself. Can you all see my screen?
Yes.
On the screen that shows the PERT analysis?
Yes.
Excellent. What I want to give is, I certainly wanted to give the whole PERT analysis for our portfolio. I tried to do the whole, I think 14 of our individual stocks, and I tried to rebuild the SSGs, but I certainly do need some probably help on actually making sure that I get to where we need on that one. So in the meantime, what I wanted to do is divide this into two parts. This month, we will go over what exactly we are trying to achieve using this. And the second thing is, once we have this every quarter, we can get a quarterly report on where we are and what is the status, what is the health of our portfolio. Joe, I emailed you the copy of this. You can share it into the handouts once you get it. For those of you who are project managers, there's a classic technique called program evaluation and review technique. When you have a bunch of tasks you are performing, activities, and how you want to reach. This part, when it comes to investing clubs, has nothing to do with that part we use in the project management world. Hopefully you can see on this slide what exactly is PERT and how we can use it. PERT is, it gives a report, it gives several reports. You can use it from the online BI SSG Plus tool, where we can create our own portfolio and use that in tracking it over the period of our holding. It essentially gives, in my opinion, I don't know if it's the right way to put it, performance of these companies in our portfolio versus what we predicted in our SSGs. So it's a good way of checking where we are with respect to where we want to be as far as our club goals are concerned. It's essentially updated once a quarter. I think that's when we get the information from. Hey Joe, please remind me, what is the company we use for updating the fundamental data for this behind the SSGs?
It's Morningstar.
No, Morningstar. I'm sorry. The Morningstar data that is updated, and we use that to cross-check with what we have within our SSG predictions. If you look at this, this is the current distribution of our holdings. I'm pretty sure when Jack goes through, we'll have a detailed reports of this. But what I want to bring to your attention is, this gives us a picture of where we are, especially say in the last column, in each holding, how much we have, what percentage. That's one way of looking at it. Another way of looking at our portfolio is to look at how much compared to where we have, what is the return we have. I think in these terms, we have the annualized rate of return in the last column. This is another way of looking at how our portfolio is doing. The third way of, again, looking just from the BBO reports, we can get a good information. For example, here, this is a report of when we bought our holdings, our stock shares, and how they are doing as we are looking at them as of today. But what additional information that PERT gives us is basically it gives us an opportunity to actively, quote unquote, manage our portfolio. It gives us information of the current status with respect to what we anticipated in our SSGs. And it also gives us an opportunity to not only look at the quality information that is available out there, but also how it is related to the value of what we are holding and how much we are holding. Like I said, this is part of the SSG. Let me see if I can show you. Can you see my portfolio screen? This is the.
Yes, sir. Yes, sir.
Yeah, this is the. If you open the PERT, I'm sorry, I think I'm having a little bit of problem here. I cannot see. Bear with me for 1 second. Yes, okay, better. So this is the. If you go to what I did is I created a report within the BI SSG SSG website. If you go to the website, and as you can see, you can create a investment club portfolio. That's what I did. I even added a line for the cash. So this gives the big picture of what all we have in here. One secret to conducting a PERT is we want to make sure the SSGs are up to date. So we need to update them as we go for. And I quickly want to show you, this is what the summary report looks like. Again, in one screen, it gives us where we are, what is expected, what is some of the original where we said buy zones and sell zones. And so based on that, it gives us in a quick one screen the whole big picture of our portfolio. And then when you go to the PERT, this gives, again, I'm not going to spend too much time on this because I am not 100% sure about some of these values. I want to double check before we can analyze and we can present. But what it gives in this screen is the whole picture of what we see the markets are doing to the left side of this line, and what we have done within our SSGs and how we can compare each holding versus what we are expecting. That all depends on our goals. For example, what is our diversification goals? What are our, within a sector or within an industry, how we want to manage our portfolio. That is that varies from club to club, and how we model this and how we verify this. So based on that, these are different. I took some of this and put it in here. These are the different data we can get out of the PERT analysis. We can use it to make sure that we meet our 15% annual growth goals, or we want to keep the upside downside potential to 3. This table gives us an opportunity to compare that. So what I intend to do, Brent and others on our club members, is to continue monitoring this on a quarterly basis and give you a quick, maybe a 5-minute update every month, and we can dive into some of the intricacies of how we compare and what we can do with this. This is where I'm going to stop. Any questions?
Okay, thank you very much, Sriram. I guess it's worth mentioning some of the highlighting on that screen. Is that auto added by the program, or like did you
Yes.
add the yellow highlights?
Yes, this peach color highlights as well as this yellow highlights are all done by the computer, the program. That's why I want to make sure that when it's highlighted, we want to compare this to the actual projections that are reasonably met. So one way to do this is to start using I know this is the discussion we had a little bit on our last call, is to use the historical data and try to update it. But the challenge with that is we need to have the most recent data to update this. So we can, in essence, we can force it to use the historical data, but we need to update the SSGs on a quarterly basis to collect. What it does is, let me see if I can zoom in a little bit. Actually, I'll go to. So you can see just on this one, it takes data from the most recent quarter, which happens to be the December 2020, and compares that to a year ago data. And based on that performance, we compare that to what we have within our SSG predictions. So in answer to your question, Brent, this is all the highlights are generated. Those give us an idea of how these are changing. For example, quickly, if you want to, it also gives us an opportunity to rearrange each of these based on what our, for example, say if you're looking at the earnings per share change in the last year. If you look at this for the newest purchased stock we have, FSFG, it's almost 190% increase, right? Whereas for something like Middleby, it's a decrease of 52%. So in a screen, we can see this. And then if you compare that to what our goals were, for example, if we had a estimated EPS growth of say 18%, but the TTM is
think trailing 12 months, right?
Yeah, trailing 12 months and last 12 months information. If you look at that, it's 127% difference. So again, is this realistic? Is that what is this information giving us? Another element, again, I never looked at something we get out of SSGs, the relative value, which is essentially the EPS projected versus EPS actual. So if we have that information, it is easy to gauge where we are and what our particular stock is performing, and we take that and see how we can project it, and is there anything we need to do with this, that, and sometimes even on the performance of the PERT, we can actually go back and update the SSGs to be more realistic.
And it's worth mentioning, because it took me a little bit of time when I was first introduced to this, that the left-hand side of the screen is really freely available information, just how the stock has performed or how the company has performed. The right side, like you mentioned, is all based on judgment of the SSGs. And so if an individual is looking at their own portfolio, it makes sense that they just compile the SSGs for the companies they own, and then they can compare their own judgment. For an investment club like ours, I think, did you actually use the settings on the individual SSGs that the person presented the company used?
I started with that, but
Okay.
but some of those things don't make any sense anymore.
Oh, because it's stale information?
Yes. I
Okay,
mean,
gotcha.
we have holdings from, I think, 2011 onward. So if we take that, that's what I spent a lot of time trying to reconcile that, and I said that let's wait for the actual analysis for the next month.
Gotcha.
Yeah.
Okay. Well, maybe I'll add maybe an agenda item for next month, or in the next couple of months, that whatever companies we are tracking, I guess, yeah. How should it work? We originally, the judgments we used are the person that presented the company, but now the individual trackers are the people that are in charge of it. So should we have the people that are tracking a particular company refresh the SSG and use that judgment?
Yes, I think we can use that. And also when we are making our own tracking share presentations, we can compare that and see what the portfolio, the PERT tells us.
Gotcha.
And
Jack?
Yeah,
Jack,
I think
were you saying
that's
something?
good. Yeah, the stock parent should refresh the SSG numbers as best they can.
Okay.
And Brent, one more thing is we can do this on a quarterly basis. By end of this month, by next month, we should have the data for this quarter, hopefully. That way we can update that. So if you can set aside maybe 5 minutes every week every third month and on a quarterly basis, I think this will be good.
Okay. I'll add a reminder to myself in our kind of club calendar to review this. Yeah, on a quarterly basis.
Yeah.
So do you know whether, if the stock parent updates the SSG and then they send it to you, Sriram, then you have access to it in your portfolio and you can automatically plug it into the PERT analysis? Is that how it's going to work?
I think so, but in the worst case, I can, like what I did today, I regenerated them all and added to them to the portfolio. So I can use the same numbers that you sent and replicate it if need be. If I cannot, I think there is a way to way to bring it up. I don't know. I need to do some research on that. That's a good point.
Yeah, and for those of us that are still using the desktop version instead of the online, I'm envisioning that like I'll refresh the companies that I own or that I'm tracking and send you like a PDF or something like that.
Yes,
I
that's
think
exactly what I.
there's
Yeah.
only a handful of like fields that we need to transpose over. So
Yes.
Yeah.
No, that once it took me more time to set them up than once we set it up, modifying them is not very difficult. So it goes back to the existing. For example, if I click on DR out and it basically brings up the SSG for it, and I can just update.
okay, excellent presentation. Thank you very much.
Thank you.
If there's no other questions, we'll move on with the agenda. I think ball is still in your court, Sriram, with the minutes from last meeting.
Yes. So how do I give it back to you? I got it. Yeah. Back to you.
Well, do you have the minutes, your minutes up that we could just walk through?
Oh, sorry about that. Yes, I'm sorry.
No problem.
I gave it back the. Um, can you please give me the
Knock it back to
presentation?
you, sure.
Yes, these are the minutes from last month's meeting. We had 290 registered interested parties and 61 visitors. That's a lot of people. And we had all our members. And Sharon Watkins, she joined on the call, but she will be, I think, scheduled to make her presentation sometime in June or some, I believe so. Again, we have a detailed list of all the visitors at the end. During the education segment, Liz presented a preferred procedure that was well received. I think she did a wonderful job of making us understand the reason why we have to do that. And then I presented the minutes from our last meeting, which was finalized and put it into the our folder. We also have the draft minutes every month in our public folder. People can take a look at it. Jack presented the treasurer's report, and this is the summary of it. So this is the summary of the diversification of our portfolio. As you can see, it's similar to what we have in the PERT. And now actually it comes from the same PERT screen. FSFG was presented, the first savings financial group by Brent, and he recommended us to purchase. We had a very good discussion and we decided to buy FSFG worth of about $1,200. I think that's a typo. Is that 1,200 or 12,000? I'm sorry.
Yeah, I think it's 12. It's supposed to be 1,200.
Yeah, sorry about that. Yes, it's, yeah, I have an extra zeros. I'll correct that. It was only 1,200. I think there was a discussion at the end on the club financial audit that was finalized. And then we talked about account renewal, BVO, and also about the tax forms. Once there are a bunch of questions that Joe answered by himself during the Q&A part or on the online part, and these are some of the highlights of those questions. And we adjourned, I think, a little after 1 o'clock Eastern Standard Time. And that's a list of the participants on the last call. Any questions, any changes other than changing this number to 1,200 instead of 12,000?
No, that was going to be my only feedback.
Excellent.
No, I'm just impressed, Sriram, how comprehensive they are. Thank you.
Thank you.
Okay, thanks. Let's move on then. I'll hand it over to Jack for the treasurer's report.
Okay. Okay. This month, stocks look like this. We have $206,000 worth of stock and cash. Our biggest holding is still Alphabet, I think. Middleby actually is next, which is a new contender for the top number. Yeah, so I'm sorry, Tractor Supply is next. All right.
Why?
Member status. We're all up to date. You can see we contribute a varying amount, less than $200. We need you need permission from the club members to donate, pay that less than 200. Transaction history, we had a little dividend, a penny dividend for the cash. As you can see here, we bought 21 shares of First Savings Financial Group. Not quite $1,300 worth. We got a couple of dividends. D.R. Horton, Gage Horton, Visa, and Tractor Supply. And then the member contributions are all up to date. Okay. Performance benchmark, how are we doing versus stock market at large? From inception, we're 14.9% growth from inception, and that beats the Vanguard 500 by a little bit. If we change it to last year, we're doing a little better, 3% better. That's not so bad than Vanguard 500. Investment performance, how do the individual investments, how are they doing? I think Sriram actually showed a version of this a minute ago. Miller's going gangbusters. Middleby almost as well. And most of our stocks are doing over 15% growth. Even Ulta is doing well, although it's down from what it was last year, I think. Essent, I think, is the only one that's an actual loss at the moment, and it's gotten better this week. We've even done well on some of our new purchases. Sprout has made us some money. I doubt the time window is so short that these annual averages don't make sense, but still we're making money on that. We're making money on DHI as well. Again, that the short time window makes the numbers not worth looking at. Even Sprout, we're doing good. Yeah. Proceedings financial. Yeah, we're doing 500%. Let's try that. Okay. Member performance. We have, oh, this is all of them. I don't want to show everybody. Good grief, Shriram and Liz, you're doing spectacularly well. Congratulations.
Yeah, you should share your secrets with us sometime.
Yeah. Short time period again.
Mhm.
Okay. Is that all the reports I want to show? I think so. Oh, I want to show the capital gains and losses where we stand for 2021. Oh, yeah. So that's not much, but for last year, you should have gotten your K1s already. Did everybody get them?
I got them through Vivio, where they like mailed
Yeah.
out hard copies or something.
No. You should be able to access them through Vivio.
Yep. No,
I do that.
at least for me, I was able to do that.
Okay. So this is what we're paid taxes on. The tax return went out last week, but it arrived last week at IRS HQ, wherever that is, Kansas City. And these are the capital gains we paid, or we reported to them. Short-term loss of $516, a long-term gain of $4,500. You can see we harvested a little bit of a loss, $1,500 in essence, to offset some of the other gains. So that kind of worked. Okay. I think that's all I wanted to show. I'll show you the way you get at your taxes, the way you do the taxes is this. You press taxes. Just shows some of the info, but then there's for each of you, here is a link to your K1. You may not get all of this if you're not the treasurer. I don't know. Okay, that's it for the treasurer's report.
Okay. Thank you, Jack. Moving on then, we'll kick it over to Steve for the stock to study. I'll make you presenter here.
Hi, can you see my screen?
Yep.
Yes.
Okay, all right, so here we go. So the stock today is the CBOE, but they've rebranded it and now they call it CBO. So I'm so old, I know it as the Chicago Board Option Exchange, but it was renamed to the CBO Global Markets Incorporated. The ticker is CBOE. What's kind of cool about this stock, it's traded on its own platform, BATS, which is a subsidiary of CBOE, which is cool. So it's a large cap, but it's just a large cap. So it's 11.1 billion, call it 11.2 billion. And then, so a large cap, the definition of large cap is 10 to 200 billion. over 200 billion is a mega cap. So this is at the smaller end. So this is a big mid cap or a smaller large cap kind of a company. So what does this thing do? It has 5 big chunks: options, equities, futures, European equities, and global foreign exchange. It's centralized in Chicago, but I'm going to show a little something here that I thought was kind of a cool graphic that they had that I didn't know. So they have 11 offices worldwide, and particularly of interest to me was the one in Sarasota, which is an hour away from my house in Florida. I don't live in Florida, but I have a place in Florida that's an hour from, so I thought that was kind of nifty. Okay, so that kind of gives the background. They're in Chicago. They started in '73, and at first they were a nonprofit, and then in 2006 they became a for-profit company, and then I think it was in 2010 they IPO'd. So they're established. They've been around for a long time. So what's the beta of this? I was shocked that the beta of this was that low. And I got corroboration. I saw a beta of 0.66 somewhere else, and I can't remember now where it was, but I know I saw a 0.66 and a 0.65. So, it's not that volatile of an issue. Shockingly, here Yahoo and Toolkit match on the debt level exactly. So, $1.3 billion worth of debt. I was a little disappointed to see, and not that this would make a decision point, but that the insiders kind of was a small percentage of the ownership here. And it sure looks like all the big mutual funds have a piece of the CBOE. Growth company, it shockingly, yes. I thought that this would have been more of a cyclical thing as the market goes up and down, but it doesn't seem to be that way. If we go and we look at the front of the, oops, that's not our stock that we're studying for today. There we go. Let's go on. If we look at that, it sure looks like a growth company to me. Okay. So future sales. So because I buy the toolkit package, it's so nice when they pre-populate it. But Value Line had 8% revenue, and they had 12.5% future earnings per share projections versus the 20 and 10.7 that Toolkit had. So I thought that was more reasonable. It was more in line. So I used those numbers. And then the return on assets and return on equity are 7.6 and 13.9. The present price is, sorry about that. Let me close the door, see if that makes it any better. There we go. The present price is $104.34. The projected PE is 30, and that's in Toolkit. And the projected earnings per share, when I started moving around the earnings per share, this is using the 12.5% Value Line estimate, and the high projected earnings per share came in at $7.69 a share. The PEG was 1.7 using these numbers, and the dividend was 0.42%. So my forecast 5-year high price is $230. It's currently $104. What I did here on the low price was I went worst case, just because I'm a nervous Nelly about the markets coming up this year. So what I did was I went into this block and I chose the price variant quotient, which was the lowest value. And shockingly, it still stayed in the buy range. Still in the buy range with that. It lowered it from like 121 to 108. So I was well pleased with that component also. So my buy range is 68.3 to 108.90 cents. The upside down is, I think it's 3.5. Did I get that right? Hopefully I got that. Yeah, 3.5 to 1. And the price target here is, $230 a share. The par was 14.4, and the projected annual total return was 18.4%. I did the Altman Z in Chartmill, and anything over 3 is good, and it came out to 3.4, so it's safe. It's not going to go bankrupt anytime. So how did I pick the stock? So I would like to say thank you to Ira. It was he suggested it, and it immediately resonated with me because I happened to read the striking price in Barron's, and they mentioned it in at least 2 articles where using an option strategy to buy the underlying, and they were Stephen Sears, who's the author of that, really likes CBOE. So, and I happen to, that's actually the express reason why I buy Barron's, is to read that article once a week. So I thought that was a great, it's something that I knew about. So others is, so trading's never going to stop. So in a time of crisis, it's gonna go up. So why do I like the stock? So I think that in volatile markets, it's going to benefit. And particularly if inflation kicks in, I think their futures division, their profits should go up. And I'm thinking substantially. I don't know if we'll get 70s type of inflation. I'm old enough to be able to remember 70s type of inflation. And I think that this is going to be a company that might be able to profit from that. And they have excellent products, the SPY and the VIX, which are S&P 500 indexes and the volatility index. If you want to invest in this, and massive segments of the market do, this is where you go. They have the products. So one interesting article that just came out was SIBO had tried to create a Bitcoin type of ETF, but the SEC said, no, it's too new yet. You can't do that. So, but they're going to keep trying. And now that Bitcoin has broached $60,000 a coin, we might see something. And if it does, they're going to get a big boost from this, because people are too scared to buy Bitcoin, but they'll buy a Bitcoin ETF. So I happen to read a lot about it, and a lot of people ask their financial advisors, "Hey, can I buy it? Is there an ETF?" No, you have to buy it directly. Oh, so I think that would be a large bump up if it happens. I think it might happen this year from what the articles were saying. So the stock market's a game, isn't it? So if you follow GameStop, GME, the option volume went through the roof at the end of the year and at the beginning of the first quarter. I don't know if we'll ever see that again, but Reddit is training millennials on how to use options, and options, oh, by the way, is 40% of the SIBO's market. So when options trading goes ballistic, like it did on GME, Even I happen to have an option on it, but I had bought one like a year before. I happened to straddle it, and the call portion went through the roof. I got very lucky. It was like buying a lottery ticket. So yeah, when good luck happens like that, the word gets around and people are going to want options. So I got very fortunate with that. I actually had that. I just am disappointed that I sold a little too early. Okay, so I did the classic Alt B, and I'll do it right there in real time. And you can see that it's recommending that you buy up to 108. That's what it's saying here. So it's a large cap. And are there any knocks on the company? I was disappointed that Morningstar hadn't done they don't have an analyst following it. To me, it's a large enough company. It's a large cap. They should have an analyst following it, but they don't. And they just provide qualitative analysis or quantitative analysis, sorry. So that's pretty much the pitch of it. And if there are questions, Brent, if you want to ask a question and make a comment, please do.
Okay, thanks, Steve. Would you happen to know the spike in revenue from 2016 to 2017? Was that an
yeah I saw that, and to be honest, there was a really great analysis of it. I'm trying to find it. I don't know if I'll be able to find it quickly. But you see that they're earning 600 million a year, 500 to 600 million. It's crystal clear in the chart, and then all of a sudden it goes to 2 billion. So there was a seminal shift. I think, and I didn't do the appropriate due diligence, but I think it's when they acquired BATS. Was this the one where it is? You could actually see the revenue, and I saw it in here earlier, and it goes from 500 and it's going up each year to like 600, and then boom, it goes to 2 billion a year, and it happens discreetly right here, and you can actually see it in the numbers. But I don't know exactly what the catalyst is, and it's just a supposition that's when they bought BATS, the quote unquote the dark pool, one of the dark pools that does the ultra high frequency trading, one of those electronic exchanges that they purchased. So I'm not sure.
Yeah, that would have been my guess. Acquisition to like.
Well, it has to be, yeah.
Revenues.
Mm-hmm. Yeah.
Okay. For my analysis, did similar numbers. I went a little bit lower, or I think maybe a little bit higher than you did on the future sales growth. I discounted all the years before 2017, just because that spike kind of made the historical growth rate look really extreme. I think on the order of 20% or so. But looking at just like the last 4 or 5 years, the historical is down to 12%. So I judged that down to 10, and I think you said that Value Line was even a little bit lower, like around 8% or so.
Yeah, I have it here. It's exactly where is it? I think this one. So I know it's going to be a little small to read, but they had revenues of 8. And then they had the earnings at 12.5. So that's exactly what I used. I thought that that seemed reasonable to me.
Mm-hmm.
So
yeah, I did something similar where I capped the revenue at 10%, and then even looked at preferred procedure and that was right around, using the latest, I think, like pre-tax profit margins, I think gave me a earnings per share growth of around 10% as well. So I'm a little bit lower than what your numbers were, but still, got it into a buy range. Looking at the, history or things, the pre-tax profit margin in the SSG shows as being down, but if you look at the charts, it, I think, has to do with that, what we'll call the acquisition or whatever happened in 2016. So they're kind of being unfairly punished by that. But in the last 4 or 5 years, maintained around, 20% or so, which is nothing to laugh at. But overall, used, I think, equivalent high and low PEs, and yeah, got it into the buy range. This reminded me of, I don't remember who presented it, but we owned ICE, Intercontinental Exchange, for quite a while, and I tracked that as the kind of the stock parent. Couldn't tell you, main differences or higher risks or anything between the two companies, but I think it did well for us back when we held it. It is interesting though, like you mentioned, that the wonders of the financial industry is that they can create a market and basically sell themselves on it, which is it's kind of like a Alice in Wonderland sort of preposition there, but I guess that's the world we live in. But looks like a healthy company and very promising. You had mentioned that the inside ownership was quite low, but looking at Value Line, I think there's only like 800 employees. So for a
it's like 1,000,
right,
about 1,000 employees, yeah.
For a multi-billion-dollar company, or at this capitalization, I wouldn't imagine that they would have too big of a chunk of ownership in it.
Right. Yeah.
That was it for me. And other comments?
The only troubling thing to me about their SSG was the projected revenue from the online, the SSG Plus tools was very much lower for 2021 and 2022 than what it showed as historically as 2020, and I couldn't figure out why. It's like down what, from 3 billion to 1.2 billion. So I have no idea why Morningstar thinks that. I couldn't. That's not what Value Line thinks at all. It thinks their revenues are going up just dandy.
This is their projection on the online
Their
SSG?
projections for the next couple of years. They don't have one for 5 years. So I don't know. That sometimes Morningstar does funny things, especially when the years change. So they just put in the new data for 2020, and sometimes they do something funny happens. But anyway, so I essentially got near identical projections to compared to what Steve got. $208 is my forecasted high. Which I think is close to what you got, Steve.
Yeah, 108 was the max buy price. Yeah.
So I think I had 106 from max buy price. So I seem to have gotten there a different way. I made it grow a little faster and didn't change the low price. My low price was a little higher, but the buy price number is very close to yours. So I think it looks like a pretty good stock and interesting stock.
I had the same problem on the core SSG. It says 2-year analyst estimates the sales is negative 20%.
Yeah.
What the heck? So then I went to Value Line, and their projected target price for the next 3 to 5 years is between 140 and 190. And if I adjusted the numbers to get within that price, it comes into a hold zone. In order to get into the buy zone, it has to be my high price has to be above $200. So I was kind of confused about this. I had trouble doing this SSG. Another question I had that came up from the presentation. So if it's sold on BATS, does that mean that it's not really that liquid? Like we might have trouble selling it, or does that not make a difference?
No, it BATS is it's completely liquid. So the primary exchange is BATS, which is the CBOE, or the Chicago Board Option Exchange, and then the bids are harvested from ARCA-X on the NASDAQ on the New York Stock Exchange. So no, it's just an electronic trading system that's proprietary, that they own, that dealers like, say, Fidelity and Merrill Lynch and Bank of America, they all get together and they have these exchanges that they still have to follow the SEC rules and offer you the lowest price, but they can do it amongst themselves. And BATS is one of those exchanges where they can do that in. And no, it's completely liquid. We if you wanted to buy it, you could buy as much as you want in a snap of a finger, and if you wanted to sell it a minute later, you could sell all of it instantly. That there wouldn't be an issue there.
Okay.
Yeah, for what it's worth, I looked up CBOE on finviz.com, and it lists the exchange as Amex. So I don't know the ins and outs of why the SSG has BATS listed as the exchange. But I think it just goes to support your liquidity answer, Steve, that it's freely tradable.
Yeah, I think so. Yeah, it definitely is. Yeah. That's one thing I know. Yeah, that's not a problem.
As far as I'm concerned, I think it looks very good. Again, one of the things that Steve pointed out, that as things get challenging as we go forward, I think this is one company that would benefit from the challenges that could come with high inflation, or where the markets are going to be continue to grow, but the economy still struggles or whatever. I think this is from that perspective, I like it. I've been a little more conservative than most of you. My buy zone was just about $100, so it's just outside of my buy zone, but I'm okay with that. But on the whole, I think this is an investment we can do for a future benefit.
Out of curiosity, Sriram, where did you have added conservatism? Did you do a lower earnings per share projection, or lower high and low PE, or what?
Yes, I did a lower than EP earnings per share. So that made it the high to be low.
Okay.
Yeah, so I have very similar numbers to Steve with a buy up to 108, actually, same number. Let me point out that by the better investing definition, this is well within the mid-cap range, which is 1 to 10 billion. But they base it on sales, not on the price of the stock. So the sales are what, 3.4 billion?
I think so. Yeah, that sounds
Yeah.
right.
So,
Yeah.
yeah, because I loved it at 95 and now it's at 104, but it's still within my buy range.
And where I think Steve mentioned that you had suggested this as a candidate to study. Where did you find this, Ira?
The investment advisory service.
Okay.
And they have a buy up to 104 on it.
Okay. Any other comments or questions? Sounds good. Thanks again, Steve. Great presentation. Let's jump now into the review of our stocks in our portfolio. Jack, do you have the current holdings up on Vivio?
Yeah, let me find them.
Okay, I'll give presenter rights to you.
Okay.
And then while you're doing that, I'll start with my companies. So for FleetCor, it was pretty lean pickings as far as news. The only thing that I could see was that Cambridge Global Payments, which is a FleetCor subsidiary, and Ziplingo, which is a provider of integrated business solutions to help direct selling companies increase revenues. They're pleased to announce they have partnered to develop an enhanced international payment solution targeted at the direct selling industry. And that really was it as far as FleetCor news was concerned. I currently have them in a hold range. The stock price is $283 a share. Our buy is like up to 233. So it's been doing well, but it's well out of our buy range. And then Tractor Supply, the big news there was that they agreed to buy Orscheln Farm, which is I guess a competitive chain of stores, about 167 stores in 11 states across the Midwest. The agreement was for the purchase for $297 million. It's currently a private held store chain and generally reviewed as a positive move by the analysts that I could look at. The stock price surged by I think 6% or something based on the news of this acquisition. So it's currently trading at the highest I've seen it since we acquired it. It's up at $171 a share. Our buy is up to 66, so well out of our buy range, but still doing quite well, with all things considered in the pandemic. And that's it for me. Steve?
Yeah, so we had Alphabet this week. We're almost on top of the 52-week high. It's still in the hold range. There was a development. There's always a ton of news on the stock, but it's separating the wheat from the chaff. And there's two things that stood out to me in the course of the month. One is that Elizabeth Warren is sharpening her scalpel. So I don't know what's going to happen there, but I was reading in the Times that they're starting to talk about this and regulation and so forth. So they're making so much money, they have everybody's attention. The other issue that I thought was actually a big one, and not the Microsoft and little Google tiff that they're having and these kind of things, but one that was substantial was they're going to stop spying on third-party vendors. So what does this mean? This means that if you use a Google product, they're going to track you like you wouldn't believe. You'd be probably shocked at the amount of data that they have on your surfing habits. However, if, let's use an example, say you want to buy a snowmobile and you put in buy snowmobile into Google and Polaris comes up. They were tracking that. They were tracking all the third-party interaction that you had with snowmobile vendors. So that's going to stop. So I thought that was a big change. And they're caching it as, oh, well, we want to make sure everybody's privacy is taken care of. But I think it's more along the line of they're not going to let go of any money. So they probably figured out some AI way to, if you put in something, what are the odds? They'll probably track it statistically and not actually, and probably get there. They probably don't even need to track the actual third-party maneuvering. So the stock took a little hit and then it's vaulting. So it's a hold. It's still in the hold range, and I certainly wouldn't sell it. Going to Visa, it's still way in the sell range, but I wouldn't sell it. You're at a 52-week high. It's mentioning that there are articles that are coming out that saying once the economy really, of course the economy is open, but once everybody can interact, and Visa and MasterCard are going to soar because people are going to go out and they're going to do normal things. So I think Visa is going to do great. I didn't really see anything negative in the month, and I just saw positive articles actually. But those are my two. Thank you.
Okay, thanks. Ira?
Okay, Regeneron had some good drug news. The FDA they accepted their Dupixent drug for children with asthma. They have positive phase 2 antibody cocktail results for cat allergy people with asthma. And the European Union is accepting their COVID-19 antibody cocktail. I have it in the buy range up to $560. Gentex has actually fallen into the sell range. With it just was up to 37. The sell range is up to about the hold range is up to about 36. I sent out the latest value line on the March 12th value line on Gentex. And so value line says that it's going to track the broader market over the next year or so. I would say if we do want to buy another stock, we could consider Gentex as a possible sale. I mean, I wouldn't call it an urgent sale or anything like that, but I think we've seen a lot in growth in that company, and we might do better by buying something else. That's all I have on that.
Okay, thanks. Jack?
Yeah. Essent reported last month their EPS missed street estimates by about 12 cents, $1.10 a quarter for the last quarter. It's down 31% from last year on sales that were up about 10% over last year. Other than that, there was absolutely no news about them. Dollar General will report on the 18th, I think, next week. There was a little news they're offering a bonus for their employees to get a COVID vaccine of 4 hours pay. Bank of America downgraded Dollar General because of headwinds from competition, stiff comparisons to last year's spikes, and most troubling was their advertising for a new CEO. And there's also news reports that the child tax credit's going to be a big boon to the dollar stores, including Dollar General. It's in the hold zone. It has been for a while. It is down from last month by about $6 or so. This is another stock that I'd say our thesis that it's going to survive the pandemic was correct, that did well. I'm not sure that we just need to re-examine why we're holding it. It might still be good to have a staple like them, a staple company, consumer staple. But I think since the pandemic is coming again, we just have to re-examine them. I would say hold for now. My last company is Sprouts Farmers Market. They reported 2020 earnings, or the last quarter earnings, Q4 earnings of 58 cents a share, up 114% on sales of $1.6 billion, up 17%. The full year was $2.43, up 95% from the previous year on sales of $6.4 billion, which makes them a medium-sized company. Sales up 14% year over year. There were several analyst upgrades for Sprouts. They also announced they're going to open 20 new stores by the second half of 2021 this year, including a few I think, smaller format stores, changing their footprint a little bit. And they are I have them in the hold zone, I think. Or they're barely in the hold zone. And Dollar General is also hold. It's my third stock. Sprouts. Yeah. Essent is also barely in the hold zone. So that's it for me.
Okay, thank you. Liz?
So yeah, I got, I'll start here with Middleby. Middleby is in the hold zone. They just had their earnings call for the last quarter of 2020. And their big news is that David Brewer, the COO, is retiring at the end of this year. It looks like a cooperative and smooth transition. Two guys are going to take over his responsibility. And it seemed like they all got along together on the call. I didn't detect any kind of animosity or anything. So it's just like a natural transition. And people that have been with the company are moving up into this position. So I think it'll be okay. They are continuing to move forward with their acquisition strategy. Their residential kitchen saw 15% growth. The commercial food service was down 19%. their food processing was down like less than 1%. So they seem to be, they took their hit, but they seem to be on track to move forward when things open up. Let's see what else here. They are starting this thing called Innovation Kitchens, and they opened one in Dallas. And that's where it's what they call it is a single point of access for customers and their channel partners to basically go in and see like all of their products in action. So like the baking, the frying, the speed cooks, the conveyors, the automation, the ghost kitchen, the technology for like integrating and tracking all of the costs and the energy use, and all of that is all incorporated into these innovation kitchens where they can actually get together with prospects and basically show them what's possible. So I think that's it for them. I mean, I could go on and on, but I think that's good for them. So they're in the hold zone. SFG, not a lot to report on them. They are still in the buy range. They declared a quarterly dividend of 18 cents a share. That's going to be paid the end of March. So that's not much to report with them. They are in the buy range still. And then Alta had their quarterly earnings call as well. I have them in the hold zone. They actually did pretty good considering their net sales of 2.2 billion last quarter compared to 2.3 billion in the year ago quarter. Their comparable sales decreased only 4.8%, which I think was okay considering that they're really like a hands-on, in-person kind of product. And they increased their online sales like 70%. They really pivoted into the e-commerce. They had plans before the pandemic to go into this Canadian expansion, and they have put that back on the table. So that's what they're going to be focusing on this year. They did do some layoffs to cut costs last year. They've got that Target partnership where they're going to do the store-in-store in Targets. They've got their clean beauty line that should be pretty popular. And then they've got their inclusion and Black-owned partnerships that they're going to be rolling out. So I think that's all to report for them. So again, they're in the hold zone. Okay, thanks.
Let me point out that Alta took a hit on Friday, about 8% loss, because their CEO is resigning, Mary Dillon, and that was yeah. So they knew she was going to resign, I think, but not so fast.
Right. No, that's right. They said it on the call that she's going to transition into a new role as the executive chair of the board of directors, but she's only going to be there for a year. And on the call, they asked her, so what's your plan after the year's up? And she was pretty cagey. She didn't really say. David Kimball, who's the president, he's going to move into the chief executive officer. And then Keisha Steelman, who is the chief store operations officer, is going to move into the chief operating officer role. So Mary Dillon is transitioning out, and they're promoting people from within the company. So yeah, thanks for bringing that up.
Does that dip in that price mean that is it in the buy range?
No, it's still in the whole range.
Still hold, okay.
Yeah.
And did you, sorry if I missed it, did you report anything on FSFG?
Yeah, that was a quick one. Basically, okay. They're in the buy.
Gotcha. Okay, thank you.
Yep, you're welcome.
And then finally, Sriram.
Yes, sir. So I am watching both the Intelligent Systems Corporation and Miller Industries. Happen to be the only two small business companies within our portfolio, or small cap, less than $1 billion. Both of them, they are doing fine so far, so good. They they had their quarterly calls. INS, which is a software company, basically supporting different areas, especially in the transactions of the credit. I think they have a subsidiary called Wirecard that actually does the that brings the revenue for them in that in those transactions, and they also recently got some government contracts and they're building on it. When I heard that their quarterly call, one of the things that came across to me is how balanced and stable the presentation was, and they were not too overly excited or alarming or anything like that. Of course, most companies do that, but I think in case of INS, I thought that was particularly clear to us. INS, compared to the year ago, they did not make any better. I think they were a little bit about 7 or 8% down compared to the year ago quarter. But I think that they attributed it to the continued stalling of the stimulus package, which was not through, it did not come through in the last quarter. So they were trying to look forward to getting more from the stimulus as well as the economy as it grows. They're looking to build on their profits, and sounded like the projections will be much better in the coming quarters. As far as the SSG is concerned, they're still in the hold zone. I think INS was not quite 52-week high. They were a little below that, and it continues to be watched. Let me see. Yeah, so I recommend not doing anything at this point with INS. Any questions on INS? Okay. If none, moving on to Miller again. Miller, that's a company that's basically it's a automobile company, auto parts company. They're a manufacturer of specialty vehicles like towing vehicles and recovery equipment. They also were affected by the whole turn down during the COVID because of their business not being as profitable and as they expected to grow. Again, they also had, compared to the year before, about 12% or so in the fourth quarter. So they were hoping to get this pandemic behind and building on that. Again, this company is mostly a family-owned company, and again, they are cautious in how they expand and how they build. But again, their forecast is expected to be much better than what they had for the last year and a half. They did recently, they started giving a dividend. So they I believe 72 cents or 1.6% dividend they announced. So that is a good sign. Hopefully that'll continue to build on. Again, coming back to the SSG on this again, they are still in the hold zone. They are just outside the, just below the 52-week high as far as the price is concerned. So again, as you have seen, It's one of the better performing companies, and that's what we want to see in the small business companies, is the small caps companies, is to have at least 15% overall growth on the profit. So hopefully we will get that this year, and I recommend just keep watching and see what we get out of them.
Okay,
Any questions on Miller? Back to you, Brent.
sounds good. Thanks, Sriram. Okay, I'll open the floor then to any buy or sell proposals.
Yeah, one of our goals is to not have a company less than 3% of our portfolio if we could help it. So we want to build up FSFG. So we may consider if we sold Gentex and split the money with FSG and CBLE. That's what I proposed.
Okay, sell Gentex completely.
Yeah, and then split the money that's available between those two.
Okay. I hadn't been tracking Gentex at all, but I pulled up the SSG and I can see it does look like that the annual revenue and even pre-tax profit has kind of fallen off in the last year or two. So I would not be opposed to selling it off to fund SSG, FSFG, and SIBO.
Yep.
Any concerns with? I know it's kind of rich me saying this because I presented a financial company last month, but if we go with SIBO as well, are we overloading ourselves with like financial related securities, or would SIBO even count?
I think it's such a different business model, and they do make money whether you're buying or selling. So I think it's different than the bank by a lot.
Okay, I get them confused because it seems like SIBO's in the business to make money out of thin air, but yes, I agree with that. Okay, so Ira's motion: sell all of Gentex, split proceeds between FSFG and SIBO. I'd be on board with that.
I agree.
Okay, Steve, any comment? Steve or Liz?
Yeah, I kind of like Gentex. So we're seeing a downturn here. Why? We had the pandemic. Did that really affect car sales? Car sales came back and they had a good quarter. I don't know. I for some reason I like Gentex. So I would be in favor of selling part of it.
So I'm looking at Gentex as compared to Essent. We're losing money on Essent, but Gentex seems like we're not losing on it. So I'm just wondering why pick Gentex over the loser.
Essent, I think, I'm just checking what Manifest Investing thinks. And Essent has better prospects, it looks like, than Gentex, according to them anyway.
So Essent, just for reminding myself, Essent is the one that we harvested a loss at the end of last year, right? Then did the 30-day or 31-day wait and then bought it back.
Yeah. For almost exactly the same price we originally bought it for.
Right. Okay.
Just our luck. And
I'm going by the SSG, and going forward, what the prospects are. And Gentech currently overvalued. I'm not saying it's a terrible company. If you could read the value line report I sent out, you know, and so, I mean, Steve has a point there, but in terms of our SSGs, and we kind of like CBOE, and we need to beef up FSFG. So that's why I'm proposing it.
Yeah,
Can I interrupt a minute, gentlemen? I need to leave. There is one unanswered question in the question box, and down in the chat, you'll find a comment for Sriram and a comment for Stephen to comment on at the end of the meeting today.
Okay.
Okay, thanks, Joe.
All right.
Yeah, I think I'm of the same opinion that if Gentex is in fact overvalued, we could sell what we have, and then if it dips back down, you know, once the market catches up, we could, you know, buy it back if there is still promising future prospects for them.
Yeah, it's really a buy up to 25. Anywhere between 25 and 35 is in the hold range.
Yeah, I mean, current price is at the highest it's ever been. So
Yeah.
if you're buying, I think it's a good time to sell.
Yeah, I can't argue it because my I've got to sell up to 23.3 on my SSG for it. So and anything over that, they're like sell. So yeah, is it flying high? Yeah, it is. I just happen to like it, but we can certainly jettison it and repopulate the others.
We could sell it and then put it on the watch list if we want to, like, you know, see when it comes back to, if it drops back to our buy range.
Yeah, I just think that this is one of those resilient companies that it's going to make money, and it's something off the radar. There's a lot that I like about it. So yeah, I mean, I would really appreciate that if we could put that on the watch list. I'd actually love that. I think that's a fantastic suggestion.
Okay.
Okay, so it sounds like we have at least a majority of agreeing with the approach: sell all of Gentex, split FSF to FSFG and SIBO.
Yeah.
Yeah. I
Okay.
think we will have, with the current money, probably about $8,000 total once we sell that. And then that gives us about 4,000 each for FSFG and
No, Gentex is 13,400 market value.
Yeah. Yeah.
oh yes, sorry about that.
I just want to point out, so SIBO is pretty close to the hold range, whereas FSFG still has a ways to go. They closed at 69.88, and I have the buy up to 97.2. So if you wanted to put everything into SIBO while it's still a good buy, I think, you know, what do I know? But it looks like we might have another month's worth to still get into the buy range with FSFG. Just to throw that out at you.
So to seize your point, then maybe we could tilt it slightly, then just to put the new money and then half of the sale of Gentech into SIBO, and then half of the Gentech sale into the bank.
Yeah. Okay.
So that'll be like a 60-40 split or something, just slightly favoring SIBO.
I'll make sure, what I'll do is make sure FSFG goes up to 3%, which won't take all that. and the rest will go to SIBO. So we'll have about 14,000. Let's see how much we have. Yeah, almost $15,000, $14,700 to spend, counting the cash we have.
Okay, so just so I understand, the proposal on the table is to sell Gentex, boost SFG up to 3% of the portfolio, and use the rest of the money, the cash and the Gentex proceeds, to buy SIBO. Is that what we're proposing?
That's what I'm proposing, yes.
Okay,
Yep. And I would agree with that. That sounds reasonable.
I would go with that.
Okay with me.
Yep, that sounds sounds good.
Agreed.
Okay. Motion carried. Excellent. Any other buy sell requests? Okay, hearing none. We can move on. I didn't really have any old business, but as I was talking through, actually I can put my, I'll take presenter rights back. Thank you, Jack.
Yep.
For old business, I guess was reminded of, just to wrap up the financial audit. I believe I had sent the audit forms around by email for kind of virtual signatures. Jack, do you remember, or Sriram, seeing, like, do we have everything we need? Is that now closed?
Say that again. Is what closed?
Just the tied up the loose ends of the financial audit. I think I had sent the form around just saying that okay. Gotcha. Okay. Then now moving on to new business, Jack, you had mentioned something about the Yankee satellite of the online chapter.
Yeah, the satellite system that the online chapter is trying to implement involves having local or regional chapters or sub-chapters called satellites of the online chapter. And one of the main reasons is that Howard Johnson, who distributes certificates of longevity, 5, 10, and 25-year certificates, is the only guy in the nation that is doing that at the moment, and he needs some help. I think he said there's like 50 or 60 such certificates nationwide to deliver. And so one of the things we'll be doing as a satellite is to distribute these certificates. So I've been nominated, yippee, the lead of the online chapter, and I'm trying to organize about half a dozen volunteers to help do that. And I haven't even sent out the letter to them yet, so we're just getting started. But you might hear from us at some point. So that's all we have at the moment.
Okay. Does that looking like a big time commitment?
It could be, but what they're also talking about, the satellite doing presentations to clubs when they ask for them. So a visit from one of the BI representatives. So they want us to participate in that. And whenever the public gets back into or whenever the Better Investing gets back into the business of doing public presentations to try and do investor education in general, not just for the BI members, they want the satellites to take a part in that as well.
Gotcha. Okay. Thanks for that.
Yep.
Any other new business items to discuss? Okay. Just to highlight our upcoming schedule for next month, Liz, I have you down for the stock to study, and I'll be doing the educational segment.
Mm-hmm. Yep.
And I listed the next kind of 4 months of meetings there on the agenda. While I'm thinking of it, I was answering a question regarding is there a buy and sell every month? There's also a larger question here about I think it speaks to the Morningstar value line kind of discrepancy, but for SIBO, I don't know that we have an answer to that. I think at least for my analysis, I was using the value line estimates, which showed, positive growth rates and everything. So I think maybe we would just have to hold that till, give Morningstar some time to refresh their numbers or to get an answer. I don't have a better response than that.
Yeah, I'll check the other vendors like Zacks and so on, the other analysts, to see who they agree with.
Mm-hmm. Okay. All right. Well, if there's nothing else, thank you everyone for attending our March meeting. Next meeting is April 10th. So again, the second Saturday of each month, same time, 11 a.m. Eastern. If you're already registered, you will get a automatic reminder, I think a week, a day, and an hour or so below the actual meeting time, or before the meeting time. If you're interested in looking at past recordings of our meetings, you can find us on YouTube. Just search for Yankee Model Investment Club. For registering for future notifications of our meetings, go to betterinvesting.org and search for our online events, and you can find us under Yankee Model Investment Club. And again, if there were other questions that came up, if you're interested in joining or have any comments or feedback, we're always happy to hear about that. So contact our secretary, Sriram, at the email shown on the screen. So again, thank you for joining us. Hopefully it was informative, and we hope to see you again next month in April.
Hey, Brent,
Thanks, everyone.
before
Yep.
we close, Brent, there was a question from, I believe, Leslie Madison about big charts. I could not see the question. I will respond back to her. I'm not able to see all the questions and answers, so I will respond back to her.
Okay, thanks. And I think there was there a comment for Steve or something in?
Yeah, there was in the comment, Ryan H noted that there is an ETF for Bitcoin available in Canada. So, yeah, so the issue that presents is, of course, you can go and buy it if you want to pay foreign taxes or have that kind of, usually it's not a big deal, but yet it hasn't passed the Security and Exchange Commission of the United States of America either. So there's a lot of risk in Bitcoin, a tremendous amount in my estimation. It could go to the moon. It could go to zero. I have no idea. It's not something that it's not a stock that generates a consistent stream of income. Let's put it that way.
Yep.
So that's my comment on it.
Okay, thank you. All right, everyone. We'll cut it here. Thanks again. See you next month.
Thanks. Bye-bye.
Bye.
Bye-bye.
Bye.
Hey, Jack, can you stop the audio and save the files?